Welcome to Policy on Demand. I'm Sindhu Bloom. 2026 is shaping up to be a real inflection point for private capital. The interplay between growth, liquidity, and tax is evolving, with real-world implications for asset managers and financial services leaders navigating the year ahead. Joining me today is Brian Rebhun to discuss what this means for the market and insights from PwC's recently published Private Capital Outlook. Brian, welcome to the program.
Thanks, Sindhu. It's always great to be here with you.
So, Brian, PwC's Private Capital Outlook was just released and maps out how several factors will affect the asset management space, and specifically private asset managers. And this is set out in 4 predictions. But before we get to the predictions, could you talk about the why behind the outlook and how the landscape has changed, particularly from a tax perspective?
Sure, Sindhu. Last week, on February 5th, we released our 2026 Private Capital Outlook with a bunch of predictions about the asset and wealth management industry. What we saw was, as we went into 2025, a lot of uncertainty around taxes. The expiring potential Tax Cuts and Jobs Act, how ultimately the new administration was going to put out taxes. And that uncertainty certainly came through, where in the summer we got the one big beautiful bill. So with the uncertainty gone, now clients have really focused on their business. How do they introduce new products? How do they get liquidity for their LPs and GPs? And ultimately, how they increase their product offerings to the industry.
Okay, so let's get into the predictions. Could you briefly go through them?
Sure, Sindhu. The first prediction that we had was around mergers and acquisitions, M&A, in the asset and wealth management industry. I don't think you could pick up a paper these days or listen to the news without seeing another asset manager purchasing an asset manager, right? Especially the larger alternative asset managers. But what we're also seeing is non-alternative asset managers purchasing alternative asset managers to get those type of capabilities, especially in the areas of private credit, infrastructure, right? Secondaries. The other big area was around GP stakes. We're seeing funds, products being launched specifically for investors, both retail as well as institutional, to buy stakes in other asset managers. And what those asset managers are doing is using that capital to grow product offering, to grow different distribution channels, and ultimately potentially to get liquidity for their founders. The second prediction was around the democratization of the alternative asset management space. What we are seeing is retail products being launched significantly in the market. And that has allowed different types of investors to go into private equity, private credit, infrastructure, and so forth. We see that as a continued focus, and we may even see the retail products outpace institutional investing. The third is around the longer hold period of private assets. We're seeing that private equity funds having to hold their assets longer, instead of 3 years, maybe 5 to 7 years. And what does that mean around getting liquidity for their LPs? So secondary funds, continuation vehicles, collateralized fund obligations, all these different types of products have come to market, preferred equity offerings, NAV loans, in order to get liquidity for those LPs. We heard from one of our CEOs of one of our private equity funds during a conference last week we had in Fort Lauderdale at the Senior Tax Executive Roundtable that DPI, the ability to get cash out, is the new IRR in terms of talking to their LPs. So what we are seeing here is that liquidity is still top of mind, but there has to be a lot of different products and creativity in order to get it. The last prediction, Sindhu, is really around this term tax alpha. We believe the after-tax returns of all alternative asset products is going to go mainstream. Investors, both retail and institutional, are asking about it, and we're going to see all types of asset managers have to produce this type of information to their limited partners as well as their general partners.
And finally, what are some next steps for firms?
Well, besides calling me, and we can put my cell phone number on the screen, is really, I think, chance favors the prepared mind. If you're really thinking of a stake sale, how do you involve and get your house in order to get a stake sale on the sell side. If you're a GP stakes buyer, what are you looking for in terms of and getting diligence around those things? If you're thinking about launching a retail product, go and get the information, because it is a different type of product than the normal institutional funds that are out there. If you're seeing longer hold periods, thinking creatively of how to get liquidity for your investors. But ultimately, the overlying theme is really to try to get that tax alpha calculation, right? Really starting to get that lingo into your deal teams and your finance teams to actually start to think about what are the after-tax returns for your LPs across the board, no matter what type of limited partner they are, and getting that information out. If I could predict how AI will go, I would probably be in a different field and I'd be trading stocks instead of doing taxes. But ultimately, I think our belief is the infrastructure around AI is really where the true investment the true alpha, right? Not tax alpha, but the true alpha is going to be created. So when you look at the amount of money being spent on data centers, when you look at the amount of money spending on digital infrastructure, when you look at the amount of money being spent on the real assets component of it, besides the software companies. And, last week, Sindhu, we saw some big, shifts in the market, right? A lot of the tech companies got hit because of the belief that there's too much spending on AI. There's too much spending on technology. But ultimately, what you heard from a number of CEOs is that there actually needs to be more on the infrastructure side. And that's where we see the asset management industry really focusing, right? Data centers, cable, fiber, right? As well as the credit needed for it, right? There's a lot of debt, in these structures. And then ultimately how you bring in corporate America into these alternative asset products in order to support the digital infrastructure.
Thanks to Brian Rebhun for that insight. The Private Capital Outlook is linked in the show notes, along with a link to register for a February 23rd webcast, which will get into the Outlook. Thank you so much for watching, and take care.